Good evening, traders. It is Tuesday, July 20th, and I'm going to go over some charts here. It's 11:30 p.m. Eastern Standard Time, but I just want to go over some charts. I took out of all my shorts Friday, and I went long some PAS Monday on the drop, and I went long some gold on the drop. I'm up on that position. I'm down a little on the PAS, and I went long Intel today, which I'm up on. Yeah, I think the market is setting up for a potential short squeeze in here. I'm looking at the VIX daily chart here, and as you see, we had the two falling wedge bottoms. The only problem with this rally in the VIX is the last 5 days you've had these tails at the top. Well, you've either had tails or you've had red candles. And today you had the engulfing candle that engulfed about the last 4 days of upside on the VIX, and you're back below 24. If you want it breaking the 23 area on the downside, this, as you see here, the histogram, you have a down tick in the histogram, and you see the MACD is curling possibly to head lower, and the stochastic turned back below 20 with a 15 and 16 reading. This is when the stochastic stays under 20, both the red and the black line, that's the K and the D line. You say the stochastic is embedded, and the trend becomes stronger in that direction. So basically, this could be telling you that we're going to have a big rally in the next few days, probably the next several sessions. And this is interesting, as you see here. But basically, if the VIX makes new lows, the VIX is clearly in a bear trend, and it's going to be broken. So the market's going to rally for a period of time. So those that are expecting the market to really sell off, and there's been a lot of people predicting a market sell off, they're going to get wiped out, and there's going to be a lot of short covering. So this is probably one of the most important charts you'll need to look at. So it is oversold, but it's embedded. So when a market becomes embedded, it is it is not oversold really. It is the downtrend, or whichever way the trend is going, is just intensifying, and you tend to have big moves when the stochastic stays down, or if it stays up. Okay, the next chart I'd like to look at is the SPXX, the S&P 500 futures, and as you see here, we closed back above the downtrend line. We closed above the 45-day, and we closed above the 18-day. And we, it's 2 days in a row we powered up above the 18-day. The positives here, you got the positive divergence on the MACD. You have the histogram flattening now. It did come down, but it looks like you stifled the momentum to the downside. The negatives, you have the stochastic is a 70 and 76 reading, so it is overbought. So you gotta be careful tomorrow. So a lot is going to hinge on what happens tomorrow. And as you see here, you have the higher highs in the RSI, and for a long period of time, you never made a lower low on the RSI. So basically, from the flash crash until all this selling over the last couple months, you haven't made a lower low in the RSI. So this could be saying that we are going to be setting up for another big rally in the stock market. Now this is early. It's still a lot could happen tomorrow if we have a big down day, and this reverses. The downtrend could come back at you. But the reason why I would be bullish is you had some good earnings. The earnings haven't been bad. You had Apple had really good earnings today after the bell. Intel's earnings were good. Goldman Sachs were thought of as bad, but then Goldman Sachs rallied. IBM, they weren't too bad. But basically, you haven't had any huge misses with any of the big players, and a lot of these companies have a lot of cash on the sidelines. So, and there's a lot of negativity and bearish sentiment. So, I would, and judging from the technicals that are going on here, it's telling me that there could be a rally. So, I would be very careful if I were short in here. Now, the upside could be capped by the top Bollinger Band in the near term, which is at 1116 right now. But if you put in a higher high here, if you take out that 1100 area, and on a closing basis, if you can take out 1100, then most likely we're going to make a run for 1130. And if we take that out, you could be heading to new highs, or you could come up and make another shoulder at 1150, 1170, something like that. So it's gonna be some interesting trading these next few days to see what the market does in here. Okay, as you look at the hourly here, you can see the downtrend line that I drew here from the two previous highs. The crucial area looks like it's about 109.50, you could say, on a closing basis. If we can close above 109.50, there's a good chance you could be forming a potential inverse head and shoulders here that could measure to about 118 on the SPY. You have positive divergence here on the RSI now from the two bottoms. Positive divergence on the MACD. Histogram is ticking up. You are overbought on the stochastic though. Both are above 80. Then you have one's 94, one's 81. So you want to see some follow through to the upside if you're bullish tomorrow. But I don't know if it's going to be able to punch through the 109.50 area with the stochastic as overbought as it is, or if it's going to have to consolidate tomorrow and make a run at it Thursday. So we'll see. Should be an interesting trading day tomorrow, and you have to be careful now, because a lot of people are bearish, and right now you're putting in some higher lows, and you could be making a run for the higher high. On the 15-minute here, you can clearly see, if you look back on a longer time scale, you have the low here, and you have a higher low right here. So that's pretty much what you're seeing on the hourly. This 15-minute is also overbought, so we could see a correction early on tomorrow, and then some upside in the afternoon if the market can pull back nicely. Okay, this is going to be it for this video. I'm not sure if I'm going to put another one up. I'll decide as this is uploading. But if this is all I put up for tonight, good luck trading tomorrow, and have a great day.